Hello and welcome to TaxPundit. The case under discussion is Anasuya Foundation vs ITO Exemptions, Bangalore Tribunal, pronounced on 26 May 2026. In this case, Anasuya Foundation, a charitable trust, filed its income tax return on time but forgot to upload the mandatory audit report, Form 10B, before the deadline. The assessing officer later denied their exemption claims, leading to a total income of over 76 lakhs. The trust uploaded the form years later, during the appeal process. The central issue was whether the deadline to file Form 10B is a strict, mandatory requirement or merely a procedural guideline. Additionally, the tribunal had to decide if a late submission during an appeal could be accepted and whether the appellate officer had the authority to overlook the delay. The trust argued that the deadline for Form 10B is not a hard limit but a procedural step. They pointed out that the audit report was ready on time, and the only failure was the electronic upload, which was corrected during the appeal. They also cited a recent Gujarat High Court case that directly supported their position. The tax department insisted that the deadline is mandatory for a reason. If we treat it as flexible, every timeline in the Act could be ignored. They also leaned heavily on the Supreme Court's Wipro case, arguing that a similar filing requirement was strictly enforced there. Further, they claimed the appellate officer couldn't excuse the delay without board approval. The tribunal first examined whether the deadline is compulsory. They followed the Gujarat High Court's view that it's directory, meaning the exemption cannot be denied if the report is available before the final order. The real aim is to check the trust's accounts, not to impose a rigid deadline that could penalize honest mistakes. The revenue's strongest argument was the Supreme Court's Wipro case, but the ITAT found it inapplicable. In Wipro, the law clearly said that if you miss the deadline, you lose the exemption completely. For Form 10B, there's no such automatic penalty. The exemption remains possible if the report is eventually submitted. The CITA said only the CBDT could condone the delay, but the ITAT disagreed. As a quasi-judicial body, the CITA has the power to accept the audit report if it's submitted before the final decision. Since the trust had also filed a condonation request, the appellate officer should have considered the report and allowed the claim. The tribunal emphasized the practical side. The trust had the audit report ready on time, and the only mistake was not uploading it immediately. Since the report was eventually available before the appeal was decided, the purpose of the law to verify the accounts was met. Rejecting the exemption would unfairly penalize the trust. In the end, the tribunal ruled in favor of the trust. They ordered the tax officer to allow the full deductions for income applied and accumulated. This decision is a landmark for charitable trusts, as it clarifies that honest delays won't cost them their exemption if the audit report is submitted before the final decision. Let's answer some common questions. First, what is Form 10B? It's the audit report that charitable trusts must get from a chartered accountant and file with their income tax return. It's required to prove that the trust's income was genuinely used for charitable activities, which allows them to claim tax exemption under Section 11. If a trust files Form 10B late, can it still claim the exemption? According to this ruling, yes, the deadline is not absolute. As long as the report is submitted before the tax officer or appellate authority makes a final decision, the exemption should be allowed. But it's wise to also file a formal condonation request to be safe. You might wonder how this case differs from the Supreme Court's Wipro judgment. The key is that Wipro involved a section that explicitly says exemption shall not apply if you miss the deadline. For Form 10B, there's no such automatic penalty. So the strict rule from Wipro doesn't apply here, and the deadline is considered flexible. If your trust misses the upload deadline, act quickly. Upload the form as soon as possible, ideally before the tax officer finishes the assessment. If the officer has already issued a negative notice, you can appeal to the ITAT and submit the report during that appeal, just like Anasuya Foundation did. This ruling supports that approach. Finally, does this ruling apply to every year? The case itself is for assessment year 2018 to 19, but the legal reasoning that the Form 10B deadline is directly applies generally, as long as the law hasn't changed. Still, trusts should keep an eye on any future amendments or higher court decisions that might alter this position. Thanks for watching this video. You can download the full analysis, case law, and case digest PDF from our website, taxpundit.org. Feel free to write to us or message us on WhatsApp at 932-630-6668 for any assistance. Don't forget to subscribe for more landmark updates.